All right, all right, all right. Hey, what's up there, guys? I don't know what's going on with the intros here. They seem to be looping or something. That was absolutely crazy. All right. Okay, give me a minute here. I don't know what's going on with the intros here. They seem to be looping or something. Sorry, guys. Give me a minute. I am I am getting like multiple kind of sorry guys, echoes here. I'm getting like multiple kind of echoes here. Let me see here. All right, are you guys getting echoes on me there when I'm talking there? Sorry, guys. I'm getting a lot of echo on my end here. Everything just got crazy. So yeah, let me know if you guys are hearing echoes or if you were hearing echoes a minute ago. You were? Yeah, okay. Sorry about that, guys. I don't know what the heck happened. You didn't get any wrong? Man, that's crazy. That's crazy. All right, hey, listen. Christopher Apes with Texas West Capital. All right. Going at you guys live here on a crazy Friday morning, man. It is just after 11 a.m. Central Standard Time. Coming at you live from just north of Houston, Texas. And I guess I'm going to probably pop off my mic here when Fibbo comes on, talks on here. And that way we can figure out what the heck's going on. Man, I tell you what, this stuff kind of kicks my rear end sometimes. How are you guys doing, man? How are you guys doing? We've got higher for longer. That's what we're thinking, right? We're going to talk about that today. Stocks and crypto. We had the Fed talk, the Fed announcement earlier this week. I'm going to tell you guys, if you don't understand what happened with the Fed earlier this week, basically it was a pivot. It was the pivot, right? Jerome Powell got out there and started talking, and he basically said, listen, we can't wait until we hit 2% to start, dropping rates. And just start cutting rates. And so effectively he's saying, listen, we're going to be doing this, right? So, use that for what you want. Historically, when they finally start cutting rates, we kind of go into a recession. Does that mean it has to happen this time? No. I've talked about this before. Most of the time, I believe in U.S. history, that's what's happened. We've gone to a recession when they start cutting rates. But in other areas of the world, and in the market, of course, has come down with that, right? But in other areas of the world, even when they cut the rates, like Germany was one not too long ago, the stock market continued to go up. So are we going to see that now? We'll talk about that. As far as, look at mine and Fibbo's charts, we'll tell you what we're thinking shorter and longer term in the markets, crypto, stocks, stuff like that. Also, I was on, Crypto Town Hall this morning. Didn't get a chance to really talk too much. But they were discussing Bonk. So I've got that pulled up in Soma as well. We'll take a look at those. And I don't know, see if we can kind of give you guys a little bit of information to keep it from being too, if you're in it, to kind of give you an idea of what you may look for. If you're not in it, to maybe go, okay, well, if you're going to get into it, here's what you should be looking for, stuff like that. So we're going to take a look at all that. And, of course, the usual charts, all those things we look at. Bitcoin especially we're talking about today. I believe Fibbo has some potential timing charts there for Bitcoin. So why don't we go ahead and bring him up there. Mr. Fibbo Swanee, how are you doing, man?
I am doing A-okay. Yeah, I'm sitting here listening to you talk about Oh, you can't? Can you hear me?
Yeah, you know what? I am getting. God, give me a minute, guys. I am for some reason getting like double feedback on this. Guys, give me just 1 second, please. Let me see if I can figure out what in the heck is going on here. This is just absolutely stupid.
Should I keep talking? Should I keep talking?
Let's see.
I'm just kidding.
Oh, what is going on? What's going on? Oh, I do apologize, guys. I do apologize. Let's see here. All right, let me try this. You think it's not, you guys aren't hearing it at all? You aren't hearing the echo or anything like that? Let me know real quick. If not, then I'm just going to deal with it on my end and with the annoyingness there.
I don't know how you could do it, dude.
We hear just fine, all good. Okay. I honestly don't know why in the heck I'm getting this down here. But anyway, Fibbo, man, how you doing, bud? Sorry about that.
Hey, no worries, man. I know how technical difficulties with trying to stream is. It happens a lot to a lot of people, so that's the way it goes. But one of the you were talking about the Fed and everything, and I was just like, as you were talking, I was thinking, man, if I knew rates would be around 5% and stock market was making a new high, I would have been laughed out of the room. I mean, it just doesn't make any sense, but I mean, it is what it is. Well, now you're on mute. You're muted out, man. I can't hear you.
Sorry about that. Here we go. Yeah, I'm not muted now, right? It's my X Studio window.
I was muted, wasn't I? Or you muted me?
Yeah, I'm not muted now, right? Wow, this is crazy. All right. You know what? Let me close out this whole other thing here. I don't know what X Studio was or what you were saying there. God, man. But I don't hear myself actually echoing now.
No, I don't hear that. Can you hear me now?
Yeah, I can hear you perfectly. I don't hear echo now. Okay, hey, listen. Whoever said X Studio, I just shut off the browser that had X.com on it. Maybe that's what you meant. All right. Good Lord, have mercy, guys. We're going to try this for the third time now. All right. We're going to welcome Fibbo one more time. Everybody stand up, excited, clap. What's going on, man? All right, here we go. Here we go. We're good now, I think.
Yeah. No, I don't know if I was on mute or not, but what I was saying was when you were talking about the Fed, I said if I knew rates were going to be around 5% and the stock market making new highs, I would have been laughed right out of the room if I said that was going to happen.
Yeah, I know it's crazy times, right?
Very odd.
We had the Fed announcement, which then just pushed the Dow to new all-time highs. It pushed the NASDAQ 100 there to new all-time highs, and the S&P is kind of sitting right below it.
Yeah, that one hasn't made a new high yet, but it's right there on the cusp.
Well, and it's kind of crazy if you think about it, right? Because NASDAQ is very tech heavy. The Dow is very broad based.
Yeah.
And then the S&P is kind of in the between them, much more tech heavy than not. And yet it's still kind of sitting there low, which is kind of funny. But nonetheless, we're about there. This is the thing that, we're talking about a year ago about a bottom being in and likely hitting new all-time highs. And I don't know about you, but I got cussed out and laughed at and made fun of for so long. And yet here we are, right? Same thing with Bitcoin going up. Same thing with, Solana and all those kind of things. And
that's the story of our lives, Chris. I mean,
it is, right? It is because
it's just the way it goes.
I mean, neither one of us are emotional traders. We look what the charts say. We've got the reason why I love having you around, man, is because you kind of look at things on the chart the same way as me. You understand where they're coming from, what's driving that price action. And, it's different than what most people watch, right? You and I, we're on this other side. Even the professionals out there, a lot of the other professionals, they tend to look at it as, what happens in the market, what happens on price drives market reaction and market participation. And we're kind of looking at going, no, what everybody's kind of feeling, what that social mood is what drives the price. And then you have some reactionary traders out there, but how else do you explain the price goes up or down before it goes up or down, right?
Yeah, I mean, for many years I was on the other side, but I'll tell you what, when I finally got the light bulb to click, it really makes a lot of sense when you start thinking that way instead of. I think it comes down to the whole economic mindset versus a financial mindset. That's what I think it kind of comes down to overall. And until you start looking at financial markets in a kind of a financial lens, and not trying to find the equilibrium price between supply and demand, and look at it from what the market is, and it's a bunch of individuals and institutions and who knows what in there that are basically trading off of a whole bunch of different reasons.
Yeah.
So you got to measure that psychology of what's actually happening within the markets. I know it's weird, but it's just it's just not a mainstream type thought, and
Yeah.
which
Which,
is mind-boggling to me. But that's just the
right?
way it is.
Well, and and if we actually look at it, a lot of the big players, the professionals that are out there, with a lot of money under them, they can kind of nudge markets around just by pure weight, right? So they don't have to understand it the same way. They can push it around a bit. You and I, we're professionals, but we are not that well heeled. If we're jumping in, we're not pushing markets around any. So we have to actually learn to, to understand why, how and why markets are moving like they do. And I think that's just absolutely a great thing once you figure it out, because like you said, it just opens up a whole new world when you're looking at the charts. Markets, they all start looking differently when you start understanding that, right? So,
Yep. I mean,
so I'll tell you what, man.
Oh, go
Well,
ahead.
why don't we go ahead and jump on here with your charts? I think you've got Bitcoin, right?
Yep, I do. Let me.
Here, let me just
I
put it in
think
there.
it's up.
Yeah, there we
Yeah,
go.
there we go. Yeah. Yeah. We'll start out with Bitcoin here. Definitely a weird situation on the 4 hour when you look at it historically. When this bull zone happened back here, that's marked all the green back in this area. Had a nice run to the upside, but we got into this period of consolidation, and it went from bear to bull to bear to bull, back and forth, kind of whipsawing back and forth. But what happens is according to the way I approach the markets and trying to measure where those big major psychology change levels are, the previous shallow fib right now is sitting at just above 38K. And that's that 38.2% level that I watch. And what happened is when wrong one. Hold on. I got so many lines on here, I don't know which one to click. So when it got up to this high here, well, basically it got up to this high right here, and then it broke into the bear zone and didn't trade back below, which would be the previous shallow fib at that point. So and when I say previous shallow fib, because when it goes into a new zone, this is the previous action, and that's why I call it that. So sometimes people get a little confused when I say shallow fib, previous shallow fib, all that kind of stuff. But so basically it kept going into this period of consolidation and never went under it. And now we're all the way back up to the high here at 45K. So now the previous shallow fib's right there. Yeah. So that's a key point for me, because even though we went into this bear zone, and can we correct back? Absolutely. But we did move down to the 61.8% level right there, just above 40K. And that would have been that first area to buy while in a bear zone. But the actual target zone for me, if I want to add more while it's in a bearish zone, is down here at the 100% level at 37.5. But then that shallow fib comes into play. So it's kind of this little zone area in here between 37.5 and 38. And if it does end up correcting back, that's where I would actually want to go long some more at this point in time. So what I'm looking at is, even though it's in the bearish zone, we're still supportive and still have upside targets of right now. 45.8 was the target that I was looking for on some of my longs. Didn't quite get there at the 45. But when you look at the positions I have on, when you take the average of all my BTC, I'm right around 38.9, I think it is. So even if it gets all the way down to this target zone, I'm still kind of around that break even area. So I'm willing to take that risk and keep exposure to the market as long as the daily is maintaining bullish structure, and it is. And I'll show you that here in a minute. But the areas to watch right now is, that 37.5 to 38. So when you go to the daily and you look at the shallow fib on the daily is right around that 38K off of the latest bull zone that I'm in. So if we do end up getting a consolidation, a correction back toward that shallow fib zone, that makes sense to be a buyer on the daily, while it should maintain the bullish zone on a correction back to that point. And it's also a nice little area to watch. When you look back at, there was a trend line break right at this area that matches up really nicely of where that support is in the market, because that was a big major move, to where we went into the bear market, and then we started back into the bull market. We do have the fib extensions between 39 and 42 that already hit, went up, made that 45K high, came back down and tested in this zone, which is that kind of that first area of support if it wants to hold and continue higher, because probabilities are a lot higher when you break 141% to the upside and you get 3 consecutive settles above it. That does kind of maintain support at that zone to where it keeps that target, that next target, which in the case right now is 53K for the daily. So I'll be a buyer on a move to the downside if it wants to get around that 38K, which also makes sense on the 4 hour. If it gets down into that zone, I'll be a buyer also. So right now I'm just going to hold my longs. As long as the bullish structure holds, I'm going to kind of keep the longs and maintain some targets. I do have a sell order in at 45.8 on some of those. And then I don't have the other targets on here, but I think they're right around 48K, 50K, and then that 53 that's on the daily. So that's where I'm at on that. So as long as this daily wants to maintain that bullish structure, even though the market's coming down and consolidating a little bit right in here, the green positive directional index on the ADX and the ADX itself is still in that 30, still in a strength building zone, even though it's been dropping. So to me, all of that is supportive. So I want to kind of keep that mindset of being supported in the market at the moment. So when you flip over to the weekly, same kind of thing here. One thing I was looking at, the shallow fib on the weekly is a little bit lower. It's right around 35.5, which I don't know if it'll correct all the way back to that point. But I mean, we'd have to get all the way outside of this bullish zone before we flip back to a primary bearish. So right now it's a good sign of, even though if it corrects all the way back to 35, we should maintain bullish structure. But the other area that I was looking at was when you got this high right here at 31.8 and it came back down to the low at 24.9, and then it broke that 100% to the upside. That 200% was a spot that I really wanted to watch for a target. But now that 38.8 has, well, after this week, we'll have 3 consecutive settles above that, which will make that 38.8 support once again for a long-term weekly. Or in other words, you're moving the support higher and higher. So that 38.8 on a longer term look makes sense when it comes to a 38K on that, and then also the 38 area on the 4 hour. So all of it's looking good. But what I wanted to kind of look at a little bit more was I was trying to look at some more timings. And since we're coming to the end of the year, I wanted to bring up the quarterly chart, which is, very, very long term. But I was looking at some timing on this. And there's a lot here, so just bear with me a second. But the first thing I was looking at was just the high to the low. And then you saw each one of these this was an 86% correction. We had an 84. This one wasn't as much, but I mean, 77% drop is pretty good.
But it also went sideways for a bit at the top, which the other ones didn't really do.
Correct. Yeah, a little bit more of a V versus, kind of hovering up there for a little bit. But yeah, I mean, even 77% still a nice correction in the market. But one thing I was looking at was some timing on some of this stuff. And one thing I was wanting to see was, once we made the low and it went up to actually get into where the high was retested, the previous high, that's that first level right here to where I have the low to the high, which is 8 bars. Now this is quarters, so the high could have happened anytime in that 3-month period. But when it comes to direction, I'm fine with that, that much of a zone. So I was looking at that. And so you have 8 bars here from the previous high to when it retested the previous high. And then we also had it from this low, and it was 8 bars, and we hit the high right in here at this point. And then 8 bars from here gives us a target of October, or basically October of 24 of next year, of when we should hit that 69, which kind of makes sense when you look at it from when it goes through the halving, and then the high that we usually see is usually post halving, and halving for next year is in April. So October would bring that 69K if it wants to keep the timing exactly right. Then I looked at the low to the 200%, because I like to look at the extensions and where that target would be on the 200%. And then that was 9 bars, because it took another a couple of months to get to that 200%. And then here from the low to the 9 bars was the 200% right here. And then also, when you look at it from the low that we've had so far, and you go out 9 bars, you're looking at January of 25 to get out to the 200%, which is 122K. Now, I know that's a long way away, but I've seen targets of 180, 200, 250. People talk about some crazy numbers.
Yeah.
But if you look from now until that time period, it's really not out of the realms of possibility. I mean, I'm not betting the farm on it, but I'm using this as a guide to help me with my other time frame trades. So now you got the 9 bars that come out to that point. Then you go out to, once you made the high above that 200%, and then it made the ultimate high. Then you look at how far that went out. This one went 11 bars. The other two, this one was 12. So, I mean, given it's a range of 3 months. So it's it's not perfect, but you do have this low to the So when it actually made the actual high after making the hitting the 200%, so you had this nice little, like, kind of a little bit more of a pop off. Then you had this one from the low once it made the high, and then you had a pop off the 69. The 69 hit right here on 12 bars, and that's what these this little semicircles up here are, the highs here. So if you go out 12 bars from the low here, you're looking at October of 25 as a target that's up even higher. I put a smiley face with some sunglasses because I don't have a clue where it could go. I mean, you're in a range from 122 all the way up to 310. It gets kind of nuts. So I don't know where that would be. So I'm just going to put a little smiley face there. So if we want to go from high to high to high to high, you're looking at October 25, somewhere above 122. Put it that way. So I'm really liking the structure of all of this. Now, can it break down? Yeah. But until it does, I'm going to keep riding this as a longer term bullish market, as the weekly is showing. And maybe we come back down to this 38K before we head higher, or we could head higher right now. We don't know. But that's why we have the thresholds, and we have pivots, and whatever ways you look at the market. We want to take the baby steps along the way. We don't want to sit back and wait like a lot of people were doing when it was at 17K. They kept waiting and waiting and waiting for this bull market, and that bull market happened a lot earlier than people were thinking. So that's why I like to look at the timing for some direction and those kind of things. But I use this as I did this on Crown Show on some different things, from 78 bars out from a break point of a trend line to the high and those kind of things. That's where I get this zone of where to find where that smiley face is. It's between 124 and 300K. So I don't know where. I don't really care. I'm not trying to say macro, this is where it's headed. But if it's going to keep the same pattern, that's where it could be headed. And then lastly, I was just looking at the monthly, just looking at some levels here, but really all the timing of the halving back to the low was 17 bars. So if you ever wanted to go back and look at some of this timing of when the low happened back to the halving, they match up really nicely with 17 bars. So the market is very cyclical when it comes down to this. But of course, we get some really awesome swings going all different directions while we're in that same kind of pattern, right? So that's why you got to go to those lower time frames. But that's where I'm at on BTC. I just want to really kind of highlight the timing that I've been following and kind of watching it that way. The only other thing on here that I don't have is putting in the trend lines of where when the trend line broke. Right here, you can take the different ones from this high down, down to here, or that kind of thing.
Yeah.
Or actually, this one would probably be a little bit more like this. But then you can take timing of when the break happens up to up that point. This trend line would have broke up to the point, those kind of things. So
Yeah.
now that we've broken this, even on the longer term, right at this point, now we're in this bullish structure to the upside, and that's really what I'm kind of keeping an eye on the weekly here, and the weekly will keep me in line of where the levels are as we go forward. So
you're thinking longer.
That's what I got.
Higher for longer.
I'd like to see your BTC when go longer. What do you mean?
No, I said so. You're saying higher for longer, Bitcoin.
As of right now, yeah.
Yeah.
Until the structure breaks down, I'm all for it.
That's the way we do it, right? We ride the trend until the trend no longer, and then we look at pulling back, and then we just look to get back in on the trend, right?
Yep. And right now we could correct all the way back to 35 and still have a bullish structure.
Oh yeah. So,
but a lot of people will get to the point where it gets down to 35 and they're gonna, we're going back to 12.
Yep. Exactly.
We're going back to 18. We're going back to 20. And I'm like, well, maybe, but right now it doesn't show us that. So that's what I look for, is those major levels.
Everything continues to be, higher highs, higher lows off the swing low. We're up like 50% of the bear market decline. We're up basically a 200% rally so far. We've been going for 55 weeks now. I mean, it's hard to, to kind of get to that point where you look there and you say, okay, I'm still bearish. Well, what do you mean you're still bearish? I mean, how are you still bearish here? And then usually they'll go and they'll pull out their fib levels here, right? And this is something where Elliott Wave, people who don't really understand Elliott Wave, they come out here and they try to use it to prove that this is bearish, right? And they'll go like this. They'll go, okay, I'll go here and I'll measure this. And man, look, we've gotten up here at whatever we've gotten up at. And well, let me make sure I get this set here. Based on log sale. Okay. Yeah. And they'll go up here and they'll go, oh yeah, we come up here. So now we're the 61.8 or we're the 78.6. Now we have to definitely go down. And, it's silly because it's just psychological levels, right? Just because you hit the 78.6 or 61.8 or the 70.5, the institutional level, does not mean that price absolutely has to reverse. It means it could be a pullback, right? I mean, here's the big picture that I've got here. There's still the same one I've been adding to, right? And we had the hidden bullish divergence that gave us this bounce. But look where we bounced. We bounced at this ascending channel that I had drawn right off the support of that. What else did we do here? We've got this blue line. I believe that's the 21 SMA. 21 SMA. I mean, look at how it's held up through here. And we bounced off right there. We've got this potential kind of parabolic rally here. So we get this move back here. I mean, there, we pulled back. We rallied impulsively. I keep talking about this. We rallied so impulsively here on the daily between the pivot and the R1 and rallied all the way up to the R3. Basically pulled back to the R2. We haven't closed below that. We continue to close above it. And rallying back up to this previous resistance here. I mean, again, everything else aside, after trading, pivots for a couple of years by themselves, that's it. The one thing I learned was most of the time when you get an impulsive, aggressive rally like this in between the pivot and the R1, and it just keeps rallying like that, most of the time you're going to hit at least the R4, and beyond that, usually the R5 or a little bit above. You're going to make a run through all the resistance pivots before you finally get, a real kind of a pullback. And so, I mean, that kind of aligns with everything else, and so, like you're saying, man, we're getting higher highs and higher lows. And until that breaks, I mean, the idea that you should be looking at bearishness or some nonsense, to me, it just doesn't make any sense, right? But that's something you have to learn as a trader, and unfortunately, especially if you're newer, there's a lot of emotion. You don't have a lot of experience. You don't really understand why markets are moving like they do, or how to forecast, or, you're not using proper risk management. So you're too large a position size, you're oversized, you got too much leverage, and all those things make the little small movements in the opposite direction really scary, right? Because they just like, they all of a sudden you're down like 20-30% and it's barely moved, right? So, guys, I always talk about it. Just real quick, I'm going to plug it again. the most important thing you're going to do day in and day out as a trader is proper risk management. Okay. You absolutely have to understand risk management. There is nobody that's actually become wealthy or actually done well in trading that has not adhered to proper risk management. You can't do it. Fibbo, with his threshold theory, approaches risk management in a different way, but it works with his system. He doesn't just sit there and let it just go through whatever and, just throw everything in one shot and all this kind of stuff, right? So, it's not that the way that I do it is the only way to do it. Depending on the system that you're using, there are other ways to do it. But you have to do it, period, end of sentence. You can't not do it. I mean, that's at the end of the day, that's what it's all about. You have to do it, right? So for me, what am I looking at here? For me, I think we've just pulled back here. I think this is a flat correction. And so based on the height of this right here, that kind of give us a target up here, at least at 47.4, at least based on that, which again gets us up here above the R4 pivot, gets us up toward the ascending channel resistance there. So I think for right now anyway, minimally, I think is where we go. I want to see a breakout. If we can get a breakout above kind of this 44,000 area here, I think that's enough to do it. And you can be pretty sure that it's going to continue to rally up there. But ultimately, I do think we've got a good chance of hitting 49.50, 53,000, somewhere in that area. And that kind of aligns with, the target areas that the Fibbo's looking at as well. So, yeah, I think we're looking good on that. What are the charts you've got here, man?
What else do I have? What else I was working on this morning? I was looking at Ethereum. I can look at the daily. It's a little cleaner.
Yeah.
We've been in the bull zone, went up, hit target, came back down, bought again. Have not sold back out at the target because we missed it just by a little bit. But worked its way down. What was this previous target within the zone here of this break, 21 to 2165, found some buying interest to pop us back up. We do have a red candle today, but right now the bulls are still in control based on the ADX. But it's ADX is at 30, so there's still some strength building for the green positive directional index there. So to me, that should give indication that buying should be found on dips into the market. So if we get back down into the zone, or even all the way down to the shallow fib on a wick, I'd be a buyer down there if it gets down to that shallow fib while it's in the bull zone. Now, if the price comes down to the shallow fib, and the RSI clicks into the bear zone, then it pops back up and closes back in the bull zone, that's a good buy. But if you buy it and it goes back down below the shallow fib, or if it goes back into the bear zone, and you bought at the shallow fib, you need to see 3 consecutive settles underneath that to actually have a break. So right now I'm still long, and just waiting for that next target at that 200%. And right now with the bullish structure, I like the way it's kind of setting up. So buy into dips is the same scenario there, because if you look at it on the 4 hour, you get the same kind of thing as the as Bitcoin, because you have that previous shallow fib that was never broken. So even though we went into the bear zone here, any longs that you've had during all of this process, you're still actually, this one actually hit the target and took profit before it went into the bear zone. So that depending on how you played it, you could still have longs. I do have some. I still kept some exposure open, even though it went into the bear zone, because this previous shallow fib is holding. So just like Bitcoin, we might see a little bit of a near-term correction, or kind of a flat kind of correction, like you were talking about, Chris, before we start heading higher to some of those upside targets. Now, for me, I'm holding out for 2760 or so on this upside on some of these other targets, because since I sold at the 141, that next level for me is kind of a little bit more longer term. But like you said, it comes down to it's all about risk management, like you said, because it's everybody has different risk tolerances, right?
Yeah.
You might be aggressive, you might be moderate, you might be a little bit more conservative. But I built my plan or my stuff around being slightly moderate to conservative, and that's why I'm a little bit more of a swing trader. I hold a little bit longer, so that's why I'm still wanting some exposure to hold while that trend is still our friend, I guess. The old cliche saying, right? So
Right, right.
basically Ethereum's getting the same kind of structure as BTC, just waiting for another breakout of that one on that. So what do you see on Ethereum? What are you looking at?
Yeah, so I mean, just keeping it simple here. There's this chart I've been looking at, forever and a day. I mean, all we did, if we look at this previous resistance here, we hit it a couple of times, then bust out. We just come back and retested it right now.
Yep.
Stoke RSI is down here. It could come back further down here, and potentially break down a bit more. But I'm looking for this range to kind of hold here. What is this? This is 2035 to 2150 or so. I mean, I think that holds, and that should get us out further, because we've just got, again, we had all this kind of consolidation here, higher lows into this resistance area,
Yep.
which is and again, it just retested here, pulling back. So I don't see a lot of real big reasons to be worried here. I mean, if I'm looking here at counting, I would just go, okay, well, 1, 2, and then 1, 2, 1, 2, 3, 4, 5. So I mean, this is either 3 of 3 of 3 or 3 of 3. But ultimately, especially if this low holds here, man, oh man, we should, gosh, what do we got here? Minimally, I think we should be looking up there around 25.86. But overall, I see no reason why we're not headed up here toward 4,700 minimum. And that just gives us this interior third wave. So that we get this larger 1, 2, 3, and we have 1, 2, 3 interior here. So 3 of 3 is all the way up there, 4,700, which is almost the all-time high. There's just really, nothing going on there that suggests that, oh my God, it's the end of times or something. Is it possible this is 1, 2, 3, 4, 5 is some sort of leading diagonal? Sure. Worst case scenario then is it pulls back here, I don't know, maybe 1,700 or something, maybe.
Yeah,
That's that last low volume node.
What's your what's the level that would break it? Like for me, it would be I'm looking at I look at it as 3 consecutive settles, but basically I would have to get below like 2050, maybe somewhere right around there before it starts to flip the other way. But that might not be a primary trend change. It's just more of a larger correction in the near term. But that's where my level's at. I was kind of curious, like if you're looking at yours, where does it start to break down?
Yeah, I mean, for me, it's right around that 2000 area. Again, psychological, zeros number, tens number, what do you want to call it there?
Yeah.
Which just kind of gets us, again, right into this area here where we had this resistance here. But even that, I mean, again, even that, I think worst case scenario, maybe 1,700 some change. That's that last low volume node before this really big high volume node.
Yeah, I mean, my major point is 1883. I mean, that right there would bring us to where, for me on my stuff, a break of 1883 would bring in 1,500 pretty easily. But
yeah.
But I don't think that's going to happen right now because the indicators aren't showing that. But if it starts to break down, that's my level. That's why I was just kind of curious where yours was.
Yeah, exactly. And that's the same general target area I'm looking at. It's 1460 or so to 1,500 right in this area.
Okay.
Would be exactly where I would kind of look for it to kind of get to if it drops below that, that 1,700 there. That takes you right into this next low volume node. There's absolutely little reason to think that anything should pop below that. Price would hit that and should just kind of pop right back up from that area, kind of like what we had here previously with this wick here. I think we would get the same kind of thing into that 1450, 1,500 area.
Yep.
And take back up if we were to do that. So, I mean, but, again, we've got to get below 2,000 for me to even start thinking that.
Yep.
While we're still kind of sit up here, for me, there's no reason to think of lower. And if we got that, again, the idea would be this is okay, maybe 1, 2, 3, 4, 5 is a leading diagonal. And from where we're at here, that would only pull back what? that's a 50% pullback. I mean, it's absolute gold. You know, when we're looking for a wave 2 pullback, and it pulling back right into the really right below the really busy area, I guess you could say, of the structure. So, yeah, worst case scenario, we do that. But I think for now we continue to look higher until we get that breakdown.
Nice.
So,
yep. Same.
What else you got there, man?
I have gold.
Pop
Couple
up some
interesting.
gold. We would like that one.
It's definitely been interesting. We went into the bull zone right here on this, this huge ass green candle.
It's a good description.
and then now we're in this little period of consolidation, but it's kind of whipsawing around this 100% level, which is right around 2050. But bull zone, next target for me is the top of this top of the zone here, right around 2073 or so. So the top of the zone, really anywhere in that zone, if you wanted, once you bought it, if you want to sell it anywhere in that zone, I just look toward the top of this one, just because of it really kind of comes down to, just looking at a trend line here. Well, actually, it's a lot lower. Yeah, the breakout's up right down in there. But yeah, I was just looking at some area in here, and the only thing I found was these highs right in here, and then I would think that's where some resistance would be. So that's where I would want to take some profit. If it comes back down to the shallow fib, I'll add some longs, and then that next target of 200% would come into play. So I'm just waiting for this, and then come a little bit back, pop it back up. And so far that's what's looking like for the 4 hour. And then on the daily, the daily went into the bull zone a little while back, came down there and tested it really closely right here, and then missed it right on this point. So the longs that I have on this are still in play. Well, actually, it hit the target, and then I bought back at the shallow fib. So I'm underwater at the moment, because I bought at the shallow fib here, but it's still maintaining bullish structure. So I'm underwater. I was underwater a lot. I'm a little less at this point,
Right.
but the targets are still upside there. So 4 hours bullish, the daily's bullish. So I'm just kind of holding my longs and just kind of riding it out. But
Just being
not
a little
much else
patient.
for that. You what now?
Said just being a little patient.
Yeah. I don't have a large exposure with it. I just have a little bit on, just enough to, just because I like the structure that it's in. So
Yeah.
I want to kind of keep that going. And then along with
Sorry
you're
about that.
gonna talk about
No, let me put you got silver.
yeah, I was just gonna say,
Sure.
I was just looking at both metals that I kind of look at. We went into the bull zone. I don't have it all colored up here, but I went into the bull zone here. Same kind of thing with gold. It popped on this trend line break. It came back up, retested right here, went up to this point, came all the way back down to test along this trend line,
Yeah.
but held the bull zone, and then has since popped up. So I'm still looking at this trend line target measurement that I take from the lowest point to the trend line. Take that same rate of change, gets us about to the top of this 141 area. So that's going to be my area that I want to take some profit off the longs that I have.
Was that 27.31? It looks like
27.31 on that 141, which is a little bit higher than the previous high over here.
Yeah.
But that's what kind of tested last time. So I think if we get back up there, it'll pop it up a little higher and give us that 141 percent level at 27.30. This one was, you go into the bull zone. We were already above this previous shallow fib. So if you would have bought, you would have been buying right around in this area, about 23 or so. So you would have been sweating it a little bit on this move right here.
it's 5%.
But then it held, broke the trend line. If you wanted to, you could actually buy again and kind of press your position if you wanted to. I didn't, but the move all the way back down here. So even though it came all the way back down to this point, you're going to be in an area where you're roughly break even, maybe a little bit of a loss. But as long as it held this bull zone, just hold it and kind of keep going.
Trust
And
in the
that's what,
process, right?
yeah. I mean, trust the analysis, trust my method. So I got to take emotion out of it. Just put it in.
Yep.
Even though it's coming back, I got to trust the system. If it's a loss, it's a loss. Usually a little bit smaller of a loss. That's what we want, right? Small losses, large
Yep.
gains.
There you go.
That's kind of how I approach things. So if I do take a little bit of a loss, big deal, move on. Everybody's going to take losses here and there. But right now it's holding. So gold and silver are both holding the support that they tested. So I like that we have that possibility of possibly getting up to some of these levels. So I'd like to see. I haven't looked at your gold and silver in a while. So
yeah, let me go
see where you're at.
Here. So, again, I was looking at this as a 1-2. We've got a minimum expected wave 3 up there around 22.6150. This right here basically looks like potentially a 1-2 right now. Again, this is of this larger 1-2 heading out. So, if we continue to look back here, this is a big 3 and a 4, and then this is 1-2 of 5 going up. And so this is just the interior here with this 1-2 and then 1-2. And so if we look at this, if I'm looking at this, it looks like a 1-2 and then a 1-2 here. Again, and we got this breakout and rally right back up into, let me go ahead and make that a full chart there. Right back up into that, that ascending support, right back up in there, finding support on it as well. We've got a lot of room here. We bounced it on the daily here at neutral and RSI. We're threatening to cross bullishly now in the SMA. Broke out impulsively after crossing bullishly here out of oversold, Stoke RSI. So yeah, if I'm looking here, I think overall we kind of continue up higher, right? And now if we pull back, I could see us potentially pulling back down here, maybe around 2000 or something like that. But until we do, continue looking higher. I don't think it's anywhere near the end yet. I think we've got further upside still to go on the whole thing here. Worst case scenario would be that this actually ends up being a flat here. So we got 1 and then a triangle. So we got A, a triangle is B, and then a C. So that gives us an ABC down. Worst case scenario, this is an ABC up. And then we come on back down here, potentially down to 1800 again. Everybody freaks out, thinks it's the end. Everybody shorting gold, and then it pops up and rallies up higher. I want to point that out that could potentially happen because this isn't a clear 5 waves up. And so, it's still possible. Yeah, I mean, and it's to put out there. So, because what's going to happen again is if it gets down to that level, people are going to freak out. They're going to be like, oh my God, the dollar's going to rip. The dollar's done dropping. It's about to rip. We're going to see new all-time highs, in the DXY. And that means gold's going to dip down, drop really low. And I don't think that is. I think worst case scenario, it'll be a flat correction. And it'll catch everybody off sides. And, like it always does, like the markets always do. And then we'll see it kind of, rip on up higher. But
hey,
right
just
now,
out of kicks and giggles, what if that's a 1-2, where's your 3, 4, and 5 possibility on the upside?
So the large 1-2 of 5 minimum expected wave 3 is up there around 2750.
Okay.
But depending on what we got here, I think that's going to overextend higher anyway. But yeah, I mean, it's going to move up there.
I'm just curious.
Yeah. And we can look here on the daily, and I mean, the daily looking pretty good at the moment here. We got a lot of room again on the RSI and Stoke RSI for price to continue higher. So we'll look for it to break back out through that previous all-time high at 2089 or so, and climb up into this wick here, and then kind of eat that higher, just kind of break out higher there. Silver. Same kind of idea. Could be, we got a WXY, pretty much same structure, right? Wave X triangle. The other one's a wave B triangle. This could be ABC up here, and then we get a pullback down here toward, $21 or $20, $20 or $21. But again, would just be a flat is what I would expect, and then head higher. For now, we'll look at this as a 1-2, 1-2, and that would get us up there above 28.5. So the larger, this local here, 1-2, has 5 up there around $48. And then that would be off this larger 1-2 here, which would be up even higher than that, heading up there Matter of fact, I've got that up there around $81 for the wave one coming off the swing low from back here in March of 20.
Yep.
1, 2. Wave three minimum expected target up there around $81. So, do we see silver outperform gold finally? Do we see it finally doing its thing and catching up? I think there's a good possibility of that.
Yeah, I show that based on the breakout levels. If it ends up breaking out, the breakout levels, silver should have a better percentage against gold, based on the levels it'll hit.
Well, yeah, and for anybody wondering, I mean, this here is 2011. This is when gold and silver hit the all-time high, and silver is still down here, like right now, like 50% rally up off that bear market low.
Yep.
And of course, with gold, those that didn't know, let me kind of pull this over here. We've got the all-time high here, right? Again, 2011, we've rallied all the way up. Silver's still way down here.
Yep.
Gold,
Yep.
all-time high, back up, new all-time high now. It made that all-time high back here in August of 20. And, which is interesting again, right? Because that's August of 20. And silver actually hit its low here in March of 20. So, gold's been rallying up for longer. Silver kind of just doing this more sideways on the way down. And again, gold just kind of was much sharper. See how gold kind of came sharp down? Silver came down and then went sideways for a while and then finished and now up and kind of sideways on top. But, this is your support. And then we broke out, came back, retested. We're building support here. We should break out higher. I think you're going to get a much better return with Bitcoin. But, if you want to diversify, if you want to do that, you can jump over there with those and have a little something extra on there.
All right, let's go to the dollar. What's the dollar doing? Bear zone for me. Broke into the bear zone right here. Working its way down. Got all the way into some oversold conditions. One of the things for a buy for me, but it's only going to be a buy with a short take profit, is it went into the fib extension zone here between 101.60 and 101.86. Did not have 3 consecutive settles underneath this level, and that's what I kind of look for. It did trade it underneath a few times, but didn't have anything consecutive. So what happens is, since this came back up into the bear zone, at the same time this zone right here is holding support, that's a quick buy. Mm-hmm. So in other words, if you want to buy while we're in the bear zone, you're going to buy it in here and sell it at the shallow fib, which is right around 102.36.
Right prior to that gap.
Which is marked right at that previous low. Yeah. So that's where your resistance is going to be. So if you are long the dollar, that's going to be a spot where I would sell it on the 4 hour here, with a target at the 200% eventually, right around 100.4 or so on the 4 hour. So in other words, we could stay in the bear zone for a while, and that makes sense because we've been, when you look at it from the daily, we've been in the bear zone for a while here. Hit this first target. I like where this 100% hit the target at the same time that 4 hour was hitting that zone. So the support held there on the 4 hour, and then it held also on the daily. So if you want that quick trade, you're going to be selling it back out at the shallow fib, with a fib extension target of that previous low. But for me to be a buyer in the dollar, because I'm kind of taking a back seat on this, I'm not shorting it, but then again, I'm not wanting to buy it yet either. So anybody that follows in my community that I deal with, some people might be buying it in here for short trades, but for me, I want the longer term swing trade. So I'm waiting for a much longer target on the 4 hour and a much further down target on the daily before I even consider going long. Or a new bull zone would be nice. But that's but right now I'm still relatively bearish a dollar. So if that inverse correlation is going to hold, like sometimes it does, sometimes it doesn't. But if it's going to hold the inverse correlation, that should help support some of those risk items like Bitcoin and those other things.
Yeah, kind of add to the narrative for those that need narratives, right?
Yeah. I don't really go with that, but if it's going to hold the inverse correlation, this is a good sign for Bitcoin going forward. So, but yeah, that's where I'm at on the dollar, just kind of on the downside.
Yeah, same thing for me. Nothing's changed. Worst case scenario, this is an A, a B, and we'll have a C. It'll break down 96, 94 at least. But until that happens, I'm still looking at this as a 1, 2, and 3 heading down of 5 waves, which should get down towards 70. Right here, I think we've got basically a 1, 2, 3. We're making a 4 here. We'll have a 5. And so my target down here is right around 100.5, which puts it right around your 100.49 area.
Yep.
That you had there. So I like that. It's a great target. Lines up with the low volume node right there, and where I'm looking based on the idea this would be a 1, 2, 3, 4, and 5 here. Before we potentially get a bigger rally right back up to 100 and, potentially 103, 103.5, maybe something like that. But I think overall, we just, we're still down. We're still going to continue lower. I don't see any reason why we shouldn't. Even if you look at, if you insist on trying to find reasons in fundamentals to trade, which I wouldn't advise, but if you do, I mean, again, Fed effectively pivoted with Jerome Powell's comments here this week. The only thing left to do is for it to do it. I think we get our first rate cut by the end of Q1. I think the market's pricing in something like 6 rate cuts this year or something like that, like huge. But, that's generally what the Fed does. The Fed gets in there and then they just start cutting, kind of like what they were doing with the raising of rates there from the previous summer, a year and some change ago. So, CPI continues to come down, PPI is coming down, PCI is coming down. I mean, any way you're looking at it, things are coming down, which doesn't mean things are going to get cheaper, guys. It just means they're not going to get as expensive as quickly, continue getting as expensive as quickly, because inflation's still there. We still have price, the cost of things are still rising. They're just not rising at 9.1% anymore. They're rising at, at 3 and change now. So that's one of the things I see
if
there.
It broke down, if it broke all the way down, what was your 5th wave?
70? Oh, I've got it going all the way down towards 70.
Yeah, I got mine is around 71.63, which actually matches the low of 2008, the low in 2008. So that'd be a major crash. But I mean, not that it can't happen, but when I look at my long-term weekly deal, I'm at 71.63.
What doesn't have here? Yeah. So. Yeah, for me, again, it's the idea that we'd have a flat correction going on. And so that would be like a wave C coming back down here toward that 70 area. But yeah, you're right. That gets us right about where that 2008, the great financial crisis, was over there. So Now I do have an alternate count that says, hey, if we were to, rally and break out above wave 2, then we might be heading up to around 121 or 124. But, that has to happen. Until that happens, you've got to continue being with the trend here, which is down, right? So that's exactly what I'm looking at there. So it's nice that you've got that level as usual, kind of, matches up with what I'm looking at as well.
I don't have the chart up, but on my weekly it shows around that previous low. But I mean, there's a lot of ifs before it gets there. But one of my main areas that I would look for is this previous low that matches the fib extension right there, just under 100. That'd be the first area so in other words, this will be more of not a limit order that I would have holding out there. This will be just more of just like a wait and see how the market's reacting if it gets down to that point. Because if we get to that point and momentum's just strong as hell, I'm going to be waiting for 96.
Yeah.
or
exactly.
Or further. But so right now, these are just mental triggers, I guess you could call them, that I'll be looking at. No limit orders right now, but if it ever gets down to that area, then we'll reevaluate it when it gets there. The other ones I have is SPY, is S&P. Went into the bull zone here, working its way up, got all the way to the target, or hit the whole zone here, but it broke up and came back down and tested the top of this zone, which is right around 47.49. Shallow fibs at 47.15. So if it gets down to the I'm waiting for it to get all the way to the shallow fib. If you want to be a little bit more aggressive, you can buy that 47.50-ish area if it gets to the top of that zone. But I'm going to wait for the shallow fib here to get in to where the RSI would probably be down in the lower part of the bull zone if it wants to correct back. But given that we've settled 3 consecutive settles above the 141 and we're on this nice run to the upside, it really opens up a lot of opportunity to the upside where I got 5K as target.
Yeah.
So that's on the 4 hour. If you look at the daily, 49.13 is the 200%, which actually matches the low to the high or to the trend line here. You take that same rate of change from the break point of right here as it was going into the bull zone. So the target of the 200% off of my previous stuff, which we've already busted through the shallow fib or the fib extension zone here, and had 3 daily settles above it. Now, did I buy there? No. I'd rather be waiting for a correction to buy the shallow fib because this shit's risky. So I don't want to be buying on a nice move like that. But if it continues higher and I'm not in it, then oh well, I'll miss the opportunity. But what I like about it is the trend line break measurement matches the 200% at 49.13. So that kind of really opens up that area of a movement up to that target. So 49.13 versus that 5K up here. That's that area up where I think it could go on this bull run that we're in at the moment. So that's what I'm looking at on SPY.
All right.
And I'm sure you got a SPY chart, right?
I don't have it up right now. I've actually wanted to take a look at the Dow here.
Oh, Dow.
Since the Dow was the first one to break the all-time high. And, it's got this crazy structure. And so, again, the idea is we've got an ABC down. And it looks like we may have an A, B as a flat here, as a running flat, and C. And if that, usually you're looking to the 100 to 123.6. So that'd be 39.1 to 40,936 kind of area, potentially to finish this out. And if we got that, then what we would be looking at likely is something like this. And what that gets you then is a flat correction. And this would be crazy for the market. Why would this be crazy? Because so everybody buys in as it breaks out a little bit higher here, and everybody gets excited about the new all-time highs. It rallies up a bit, 10%, something like that, right? Gets rejected, comes back down, and everybody starts getting bearish, right? And so then everybody's bearish. Oh my God, yeah, it's coming down because everybody was bearish all year here, guys. Remember, there are very few like Fibble and myself that were actually bullish about this. If you guys will remember, I was talking about previously getting up here that it looked like that might be the end of the super cycle, but then we didn't get that blow off top. And so as we kind of did this, I was like, well, we didn't get the blow off top, and it looks like we're getting 3 waves down. We got a new all-time high coming, was what I was saying, right? So what does this do? Everybody and their grandma basically been offside, oh my God, been sitting on sidelines, not been getting in. Oh, it's a bear market bounce, and here we are, new all-time high. So now they get a little excited, they get in, and then it comes against them, and then they're like, crap, they're losing money, right? They finally get in, they finally go long, pops up about 10%, and then comes back against them. If it does that, the idea here is that we would probably get a pullback down here toward this bear market low we had around 28,600 or so, or maybe even a little bit further. Now that would be a normal expanded flat. So for like a year, we would come down again like we did here, but it would be sharper, right? This is a pretty sharp move. This one took time, and there would be a pretty sharp move, 5 waves down. And everybody would then tell you, especially once it drops down below wave A there, oh my God, it's the end of times. This is the depression we've been looking for. And they'll find narratives in whatever's going on economically to tell you why it has to happen, okay? The problem with that, though, is that it is a 3-wave rally. This looks like a 3-wave rally. If it's 3 waves, it means it's corrective. So 3 waves down, 3 waves up says, okay, maybe a flat. Now, the other possibilities, the other thing I talked about, I've talked about all these guys, right? Those of you who've been following me for the last year, these are what I've been talking about. The other possibility, instead of a flat, we just kind of go sideways, basically, in the form of a triangle, right? So instead of A, B, and then, 5 down is C, big, sharp move down, basically we would just get wave A down here, wave B, we get a wave C, we get a running triangle because it broke out above the all-time high. We get D and we get E before it actually continues up higher, right? So kind of something like this maybe. I can't even do this here. And so what does this mean? Well, this means for potentially a year or more, we would go sideways. So 2025, we could quite potentially be going sideways. And it would just, when you talk about things that'll wear general market participants out, it's this idea that, first of all, you've got what you think is a trend direction and you think it's got this big reversal, and then it just kind of goes sideways. So you don't do anything because you're thinking it has to go down. Instead, it just goes sideways, right? Again, you get ready, you finally give up, and you finally join in when it breaks through the all-time high, and then it kind of craps on you, jumps back in. Continuing to go sideways here for another year would just those, which is most of the market participants, it would just continually just wear them out. Like, what do you do, right? They thought it was going down at first, that was it, depression incoming, and it didn't. They fought it for a year, and then it's an all-time high. They jump in the all-time high, pops up, like I said, about 5-10%, and then drops back on them. They lose money there when they finally dropped in after a year of sitting on the sidelines. And then it just goes sideways again for another year or more. I mean, that kills your market. People just get crazy, right? The good thing about that particular scenario, though, is once you're done with that triangle, with the length of time that thing's going sideways, it's going to be a hell of a thrust up to finish out. And then you're going to get your blow off top. Then you're going to get, probably some larger, really bad depression, or maybe a recession, or maybe even a depression at that time. But that would be years off. So, right now we've got you bore them to death sideways and you make them sit on their hands. They have no clue what they're going to do, and they're miserable. They're taking Mylanta every day, drinking their Pepto-Bismol. Or they get excited because it breaks down and starts moving sharply down in 5 waves. And then when it breaks the low, they go, yes, finally. I was right, finally. And then what does it do? Drops down 5 or 10%, and then boom, pops up and rallies back up. So I think right now, that's potentially the 2 ways it is. Is it possible maybe you got a 1-2, 1-2 here? Maybe. I think that's the less likely of the scenarios. But if it is, this would be a 1-2. And again, your 3 is still kind of coming out here to that, this same kind of area, this 39.8 would be your wave 3. So what would I do? I'd wait and see. We're going to get up here to 37,906 and then or are we going to continue higher? If we go higher, are we going to get up here to 39,100 or so is where I'm looking, or 40,090 this area? If we get up there and we pull back, it could be either one. It could be, wave B and we're coming down now, or it could be 1, 2, 1, 2, 3. And then it just depends how far do we pull back here. Because if we hit this 39,810 area for our wave 3, it should only pull back, maybe 36,725. That's your 38.2. So if we got that and then it rallied back up again, I'd say, okay, well, this is 1, 2, 1, 2, 3, 4, 5 will give us 1, 2, 3, 4, and 5. Either way, guys, whether you're looking at the 2 larger wave 4s, the triangle or the flat correction, or you're looking at the possibility maybe wave 4 is done there at the bottom and we've got a 1, 2, 1, 2 in progress here. No matter what you look at, none of that says the end of times, depression, recession, huge recession coming in or whatnot. Overall, it says higher for longer. It's just how long is the sideways or pullback prior to that. I hope that makes sense, guys. I know it's a couple of different things that I'm talking about there, but overall, I think, we at least have a couple more years overall of all-time highs, which would align with what we expect with Bitcoin, right? 2025, 2026, maybe somewhere around there. Maybe we hit an all-time high and that's it.
Where's your upside? What was your upside target for this?
If this is an ABC right here, we usually look at the 100 to the 123.6. So that would be 39,130 to 49,36.
Okay.
And if this happens to be a 1-2 here. then it would be right between them there, 39,810.
Okay. Yeah, because I was just looking at goofy stuff because I didn't have a Dow updated, so I was just looking at the trend line break.
Yeah.
And just took that measurement, and that measurement brings it to 41.3.
Yeah. See, I like that. The target's right there. So, right in there with it.
Relatively
and-
close, but if you flip over to my screen, I'll show you what I'm saying. Because
Yeah,
you were
let
on
me
the
do that.
daily.
Yeah.
I was just looking at the trend line break measurement. That's all I was doing with the retest.
And that gets you that same area. Yep.
Yeah,
I love it.
that's why I was just kind of curious of where that fell compared to what you were looking at.
So it makes a lot of sense. Yeah, for sure. I mean, again, when we're getting these similar targets, you're looking at different ways of finding it. Yeah. NASDAQ was the other one I want to look at real quick. This is the NASDAQ 100. This one actually isn't showing a higher breakout. The futures did break out higher. This has 16,764.86. 16,669.77 is a swing high here. But basically, again, same idea. A, B, C down. And then, now this one's differently. This one has rallied up, right? So if we're looking at this one, it looks more like a 1, 2. If I had to guess here real quick, 3, 4. Working on a 5 here. And why is that important? Because that would align with the idea that that on the Dow here, that we've just got a bit higher to go here to finish out the rally. And so this would do the same here, but things would turn out a bit differently, right? Because if we're going to get, let's have, I've got the measurement here, 17,140 or so, 17,141 here on the NASDAQ would give us that fifth wave based on the height of the fourth wave here.
I got 17.5.
What was that?
I have 17.5.
Yeah. So right above that, yeah. So, I mean, and this could overextend, of course, but, the idea would be we get that move and then we get a pullback down to around 13,350, 13,400 here. Gives you that 50% pullback just beyond wave 4 there, right to this previous kind of sideways kind of resistance we had before the rally there. We kind of hit this resistance here and then we popped out above it. And you'd kind of come back and retest that area finally. It's the same kind of resistance support all the way through here. You gapped over here as well, supporting in that area, resistance here. So it makes sense to kind of get that pullback. But I'm really going to kind of use the NASDAQ personally to kind of gauge what's potentially the play out may be for the Dow and the S&P. The S&P hasn't quite broken out yet, but the S&P looks a lot like the Dow with the potential ABC up or, 1, 2, 1, 2. So I'm going to use the NASDAQ probably to get a better idea of which one of those, is it a flat? Is it a triangle? Is it a 1, 2, 1, 2 coming out there to do it?
Yeah. I got the NASDAQ too. And to me, the NASDAQ looks a lot like Bitcoin. And that makes sense, right? Being a little bit more tech heavy.
Yeah.
So I have bull zone working our way up, shallow fibs at 16.5. So the target, the reason I'm using trend-based extensions is because we're making it into new highs and I don't have anything to go back to. But the thing is we also have the previous shallow fib that's never broken as we worked our way to the upside here. Because when this made the high here, this move right here did not break what the previous shallow fib would have been at the time. So the same kind of thing is in Bitcoin and Ethereum is we've rallied up where it's never broken that structure. So even though it went into the bear zone right here, it did the same thing. So you want to continue your longs, and right now it's still working our way up. Shallow fib target. The extension I took from the start of my fib or my threshold here to the high, and I took this move right here, and since it held the previous shallow fib while it was in the bear zone, that would be the bottom, and then you can look for that trend based extension. And that's where I get that 17.5 on that 100% move off of that, just that boom, boom, boom kind of look. But so right now, long until 17.5, which makes sense because, like you said, with the like if the dollar is going to drop and we have the inverse correlation, and tech's starting to move, Bitcoin starting to move, all that pattern looks good. So when it's all kind of working together, that's where you get the comfort to say, all right, I can keep my longs on for now, because everything looks good. I mean, ADX is still bullish, never crossed bull zone. So any dips in the market should find buying interest. So that's where I'm at.
Yeah, I like it, man. I like it. I've got, let me see here. What else do I have here real quick? I wanted to talk about Russell 2000 real quick here. I've got the futures here. And so previously I had posted a chart which said, I think we may get a rejection here at this descending resistance coming off of way up here at the all-time high. But I said, after that, if we popped on through that, we'd be looking for this kind of area up here. And so I've updated the count. It looks like we're doing wave circle 4 on this pullback right now. This is the 12-hour. Let me see here. There we go. This is the 4-hour now. So we can come down a little bit further here. If we actually get the, let me see here. Actually, we can look at that as a flat, I think. We might be looking at just 3 over here, and then it's ABC down, ABC up, and then 5 down. 38.2 is down here around 1980. 50% is down here at 1962.90. So I would be looking for a reversal in that area that kind of takes us up. And that means if we got all the way down to the 50, that would get us up here to 2096.8, which gives us just barely a new all-time high. Oh, I'm sorry. I didn't mean an all-time high, did I? No. Let me look here.
It might be.
No, not all-time high.
Yeah,
no, this structure here, yeah. Because what I was thinking was, listen, if our majors and everything, and Magnificent Seven, all they've been running all year long, if they're finally looking to get their 5 waves up and pull back, and now we have the Russell 2000 here, which has been going sideways for 550 somewhat days, looking like accumulation here with a bit of a spring down here. Again, the idea is that we get that rotation into the small caps off them large caps, right? So that it's kind of, and so everybody that's looking like, did Jerome Powell actually, manufacture a soft landing? Everybody's in disbelief. Maybe. If we can get that money rotation into small caps, there's no reason why we should see the markets do anything but overall just kind of continue up higher for, probably a few years more, as we were talking about, right?
Makes sense to me.
Yeah. So I think it's kind of where we're at there. Let me see. I think other than that,
was Bonk. Everybody,
Bonk. Let me pull that up here real quick. So I was on what's it called this morning, Crypto Town Hall. They were talking about Bonk. Let me see here. I think we've got a target of 4281 there. Let me pull. You can see my count. It goes 1, 2, and then 3, 4, and then 1, 2, 3, 4. I think we've got a little bit higher out. We've got to break out actually above. Where do we need here? Where's my thing? Oh, there it is. If we break out above this 32.000032, then I think we get that 00004281. And I think that then does it. From here, it gives us a 1, 2, 3, 4. And that would be the 5th wave of 5 here. It's too high up, too much to the end for me to even be interested in it. We do that. If you guys are going to jump in that, man, just use some really serious proper risk management. Otherwise, you're just asking for trouble.
Yeah.
Right?
On mine, unfortunately, not enough data for me to really be comfortable with what I'm looking at. But I went back and looked at some different fib levels and all that, and this is what it kind of came up with for zones, which is not going to be the most confident zones out there. But we did break into the bull zone here on at this point. You really, unfortunately, the way this, it's just a weird. It's just not a lot of data. But
yeah.
The way I look at it is we're on this bull run. And then when you take the extension here off of this previous high when it first started, the 200% was right here. And then a couple of things. It went to the 100% with the previous high, came back down a little bit, and then broke out to the 200%, went above it, came back and retested that as support.
And then bounced.
So that's what I liked it on that. So the only measurement I could really do on this is if you take the movement up to this point and you look at this as just a horizontal trend line, and you just take that rate of change to that point and take the same rate of change to the upside. I mean, that to me would be my next target. Not much else I could do with it at the moment because unfortunately my method needs a little bit more data, unfortunately. But there's other ways to look at the market. You know what I mean? It's like that's why Chris is looking at it in a different way. You might be able to find other targets looking at it differently. But I'm looking at 1364813 after 3 zeros. That's basically where I'm at on that. But right now, bull zone,
definitely possible. Yeah, I mean, definitely possible. Again, we're in blue sky territory.
Yep.
People are really getting interested because it just got listed, on Coinbase. I don't think it's on Binance yet. Whatnot going on there. But interesting, you said that calculation because I was actually looking. If you take the swing low to swing high there, the 1618 comes right up there at around 39.2, just shy of that target I was looking at there. So the 61.8, if you add 61.8 to that of that entire drop to the top there, and 61.8 golden pocket kind of idea and all that, kind of gets up there. So I would look there, and then if it keeps going, man, I would look at what you had as far as a target there.
136.
136 up there. Yeah. So I mean, and guys, listen, this is what you're kind of doing. This is why I said, listen, if you're going to jump in on this, or if you haven't got out yet, you need to have really good risk management right now. Because anything can happen. The way this thing's been running, as far as it's gone, anybody can take profit. And if a big one decides to take profit, it can knock price down quick, fast, and in a hurry.
Yeah.
And you just want to make sure that you're able to lock it. It doesn't do any good with you if you're riding this up and you're making all this money on paper and you can't get out of the damn position because somebody else sells before you and they've got a huge sell. So they're first in line as price is coming down. And you have to wait behind whoever else put in their sell orders before you, for them to all get filled before you get filled.
And if you end up putting like the way I would normally trade this is if I bought in this area right in here, or even if I bought up here right now, my stop would be right here. But in this kind of a market, if you put a stop there, that shit could run right through you, and you're going to end up getting filled down here by the time it even registers that your order's even there. So 100%. These kind of markets are a lot more difficult when it comes to because for me it's not a lot of data, so I can't do 3 settles under the 200% level because that shit might be 0 by the time it gets three settles. So to me, anything that's a little bit more newer like this, it's a little tougher for my method. But stops are going to be key. But to me, it would be like if I'm trading this, I would almost have to be in front of it and get out of it in front of it instead of putting limit orders in.
Exactly.
That shit will run you faster than it'll get you.
We've been around long enough to know, right?
I've had a few of those in my lifetime.
Different markets, still the same thing. Yeah, and you can't do anything about it.
I had to stop. Yeah, you did.
And this is great, guys. Listen, if you don't know, if you're new to trading, you don't know yet, just because you put a stop at a certain level does not mean you're going to get filled at that level. Okay? So what I was saying earlier, before we go here, okay, let me just explain this for those of you that maybe don't know. You're new to trading, you're trying to learn, right? You put your stop in, and what that means is you are in line for whoever put their stop in before you prior to that level. So if somebody is trying to get out of a really large position and they get their stop in above, before you put yours in and above you there, they could, because they came in before you, they need to get filled before you. So if their big old huge sell position is going down and it pushes through your stop loss level and they're still filling their sell orders, well, you're SOL. That's slippage. That's what happens. There's not enough liquidity to completely fill their order, but the orders are filled in the order in which they're received. So if they're in there before you, they could just sit there. And this is the danger. This is 2017 when I first got into crypto, started trading crypto. There's a lot of pump and dumps. and people couldn't understand why they weren't making money. These things shoot way up, and then they couldn't get out. And it was for that reason, because the people who were manipulating these pump and dumps were the first ones in with the buys. They were the first ones in with the sells, and they had large positions. And so you're coming in buying in the pump and dump, and they're selling into you, and they've got so much to sell. It runs through everybody's there, and it pushes price down. And so if you're trying to get out, it doesn't matter that you wanted to get out, that your stop loss was there. That thing drops 50, 75% lower before you get filled. Guess what? SOL, guys, SOL. So always keep that in mind, especially if you're chasing all these micro caps that turn into, potentially into something more. A lot of them don't, and you're going to get caught on stuff like that, okay? All right, guys. So that's it. It's 12:30. I know Fibbo's got to get out of here. I've got to get out of here. As always, remember, the only thing you control in the market is how much you lose. So, please keep working on that risk management. Fibbo and I, Fibbo comes on every other week, guys, as his schedule allows. And sometimes he's got something else scheduled, so he can't. But generally speaking, he's in here every other week. So he'll be in 2 Fridays from now again. You can join us at members.texaswestcapital.com. I also have a special going on for our group coaching. We're going to double the price in January. But I think we've still got 4 seats left. We just the other day opened 9 seats at a really discounted price, like 40% off our current rate. And so if you're interested in that, you can find the link on Twitter, X, whatever, TX West Capital. If you're not on that and you're interested, oh man, hit me up. Send me an email to christopher.inks@texaswestcapital.com or contact@texaswestcapital.com or sales@texaswestcapital.com. I'll check them all. It's a first come, first served basis, but you can get in with us even. And what that means is, even after the year's done, if you choose to remain with us, most people tend to, you'll still get it at that inexpensive, that discounted current rate, right? You won't have to pay the 2 times price or whatever else we end up raising it to as we continue going on. Why are we raising prices? Because I generally haven't over the last 7.5 years, and what I teach works. If you're not convinced over the last year of all the bottoms that I've called here, and how I've done this, I can't convince you. But if you listen to that and you go, damn, I'd love to be able to do that, and you're serious about actually studying and learning, man, join us. Take advantage of this right now. Like I said, I think we've got 4 seats left at that price. So let me know, all right? Anyway, that's it. I appreciate you guys joining as always. And like I said, you can join us otherwise over Fibbo's Threshold Theory. You can get that over there at members.texaswestcapital.com as well, and jump in there. It's a great thing to add, especially if you're in our coaching, which is everything else. Elliott wave theory, price action, Wyckoff, how understanding how and why markets move the way they do, risk management, all this stuff. We've got guys that are in both the coaching program and Fibbo's Threshold Theory, and they say, man, it just works together perfectly. So anyway, there you go. Okay, guys? I hope you guys have a great weekend. Y'all trade safe. Fibbo, man, I'll see you over there, Texas West Capital, all right, in a bit.
All right.
Take care, everybody.
Later.